Hello everyone, welcome to another episode of Traders Classroom. Michael Madden with you on Tuesday the 4th of November. Today we're going to take a look at the US dollar index, DXY, and we're going to discuss when we have to change account, or if the pattern we're working with, the key level or whatever, is violated, or maybe we would get additional price action that questions the pattern that we're working with. But ultimately it is something that we have to do with the wave principle, because more price action brings more information, and that we have to be constantly reviewing that information in the context of the pattern that we're working with. So here is the US dollar index. On the left hand side it is the weekly chart, and the pattern that we're modeling is a double zigzag still unfolding from that 114.78 peak, basically counting an impulse into the 96.38 low, and then the price action since, as you can see even here on the weekly chart, it's quite overlapping and corrective. So we're considering that the B wave within the still unfolding zigzag for red wave Y is still in play. Bit more detail on the right hand side here with the daily chart. You can see the internal waves that we're labeling. It's suggesting a triangle, so basically back to back corrective price action. And against 99.56, if wave C has ended, the remainder of the pattern must unfold below that lower swing high. So at this juncture, we projected the level where wave D will have traveled 0.618 times wave B. So we can do that with the internal waves of a triangle or a contracting triangle. And so here, basically at the end of October, our focus was on further consolidation, basically, to complete this pattern and the key level to work with. So the observation is that at this juncture, the price action from 96.22 is very corrective in nature, and that is in line with the triangle pattern. So here, very corrective price action into the 96 low, and even from what we're labeling wave A, we have a three-wave move. So at this moment in time, the pattern in play here, as we're considering, is a diagonal or a triangle. We were initially considering A, B, and then wave C of a flat. And under that scenario, wave C must unfold in 5 waves, be it an impulse or an ending diagonal. We would favor the impulse pattern because we wouldn't start labeling a diagonal area in its development. We want to see at least wave 4, and preferably we want to be able to count the diagonal nearly complete before we start considering that kind of pattern, because they have a high failure rate, and if you default to diagonals very early, you will be wrong more often than not. So with thinking of probability, you would be defaulting to an impulse pattern. But here in this case, we didn't get continued evidence to favor the impulse pattern, because it is quite a three-wave looking structure. And when we got a deep enough pullback, it basically eliminated the situation that we were working with. So in its place then, we were adopting the triangle, because we had been considering 1, 2, and then 1, 2, and then watching to see if we had ongoing strength for wave C of the flat. That didn't hold, so we basically adopted a triangle pattern, favoring that this rise from 96.22 was a correction. So as price action developed then, we didn't continue lower. We violated the upside key level of 99.56, which basically eliminated the idea wave C was unfolding from that juncture. But then to rule out the triangle altogether, we would look for a print above 126. But also to be aware that we're considering a contracting triangle. So when we're looking at triangles, if this was to be a barrier triangle, we would expect the BD trend line to be horizontal, not the AC trend line. So when price action starts to lose what would be the contracting nature of the pattern, so contracting trend lines, the odds of the C wave or the odds of the triangle is starting to, it's getting lower, it's lower probability. And yes, this could be A. We have pushed to a lower low, so we have taken out the origin of the move. We could have an expanding triangle, because if this does unfold as a three-wave move, we would have A, B, C. Then we're looking for wave D to come down below 96.22. And like I discussed with the diagonal pattern, the ending diagonals, those are rare patterns, expanding triangles, and you wouldn't begin to start labeling it expanding triangle in real time, i.e. start to consider wave C to be part of that pattern. So that goes down the lists of alternates. So really at this juncture now, we have to investigate, what's the story with the price action from 96.22. And if it is corrective, like if we can't consider this to be wave C of a flat, at that juncture then we may have to go back and consider that maybe we're incorrect with where we've labeled the end of an impulse, and maybe we have to reconsider the pattern at much going back in time. And that's something that we'll have to do at times, and it just takes another bit of work to go back and review the price action. Because with the patterns we're working with, it's in hindsight that we're going to look back and say, oh, that does still fit the higher relativity pattern I'm working with. Yes, everything is working out, and things are holding, key levels are being respected, and pattern and price action is unfolding as the guidelines are suggesting. And then when the opposite is happening, we start to violate key levels, we often have to go back and question the internals of the price action we're working with. And this is a scenario where I had to do that with the dollar index. But what made it interesting is, like, it wasn't that easy to go back because of the price action from 96.22. So let's just take a look at that first. So here, moving down to the 4-hour chart, just to get some more detail with the rise from 96.22, I want to just kind of show you how, even though I went back and tried to consider what could be the flat pattern, i.e. if we were to get 5 waves unfolded from 96.22, at this juncture, I don't have a case to go considering what could be an ending diagonal. So if I was to get some trend lines and consider maybe could this be the overlapping price action in a diagonal? No. I could start to consider maybe could we go with an impulse pattern, and at this moment in time, would I start considering allowing for some overlap between waves 1 and waves 4, waves 2 and wave 4. So if that was the case here, if I take the high of wave 1 and I just pull it across and say, well, if I was to consider this to be 1 A, B, C, call it an expanded flat or running flat, for wave 2, and then consider this to be wave 4, wave 4 did not enter into the price territory of wave 1. However, it did overlap with the price action within wave 2. That is something that I was considering, but the problem here is the pullback for wave C of what would be wave C of 2. It's if we just get down into a 6-minute chart, that doesn't count well as a 5-wave move. So if we look here at the internals of that, we could consider 1, 2, maybe 3, 4. But then at this juncture, then we have to go considering some sort of an expanding diagonal. And the fact that we don't get like a textbook scenario for an expanding diagonal, it makes that less likely that we have that ABC scenario unfolding there. So if I go back out to my 4-hour chart and I start to consider other situations, and even the situation we were working with, which was what would be a double zigzag unfolding. So we were considering, I'll just go back now with it's the easiest way just to do this. The double zigzag where we had 5 waves, and then if we were to consider this sideways price action a running triangle, and then consider 5 waves out of it, we'd still stick with the idea we had a zigzag, a next wave, and possibly then a zigzag unfolding for wave Y. But when I go back to the daily chart, then I can't put a W, X, and Y. I can't put a combination within this move if it was to be considering it something else. So that's a situation then where I had to go back and consider maybe the internals here, and can I make a case for maybe the pattern that unfolded from 110.18 actually ended at 96.12, and the fact that this is unfolding in such a corrective manner that this would be wave B, or maybe the start of wave B. So after going back through the price action, what I did was I still ran with the idea with a series of 1s and 2s, and then we did get quite a bit of overlapping price action from here. And the case with overlapping price action following a strong move is often you have a series of 3rd and 4th waves to play out, or you have a diagonal. And it wasn't possible to count just a diagonal into the 96 low. So what I did was I got evidence to consider that we could continue to favour that this was a 3rd wave low and that we had a 3-wave rise. But then I adopted an ending diagonal that unfolded into the 96.22 low. So we had 5 waves for an ending diagonal. And in turn then I can continue to count the price action from 96.22 as a double zigzag. And this could be wave B, or possibly just wave A of what may unfold as a more time consuming B wave. But ultimately, with the additional price action, being aware of the idea that the triangle is no longer up the list of probable accounts. It's after basically being dismissed. We had to go back, review the price action leading into the low, and then favor that we had a larger impulse that ended at 96.22, and from then price action is pushing higher in a correction, a double zigzag for potentially wave B. Now going back to the guidelines then of what could be unfolding for wave B, we have to consider if 5 waves have unfolded and a 3-wave rally is underway. The first thing we want to see is price action getting back to the high of the previous 4th wave at 1 less than a degree, so that would be 126. And then if I just take some Fibonacci retracement levels, we can take the distance up wave A. So I just changed the color to, because I'm dealing with green, A. And anytime I put a Fibonacci grid on price action, I'll always take it back to the origin of the move. And I'll just quickly look at the price action that I'm analyzing and see if there's any recognition of the levels prior or in history, or a while back when the move was unfolding. Because you wouldn't do that in real time. It's when the move is over, you can take your Fibonacci levels back. We can see that there was, price action it seems to fit the price action here. There's recognition of the corrections and the lows. And this is just by eye now. It's not an exact price action was bounced off the levels, but to me now it looks like there is this grid does harmonize with the price action. And you can see even that the initial zigzag met the 23.6% and pulled back. So I'm going to watch now to see if the dollar index pushes up, tests the high of the previous 4th wave at 1 degree, and maybe we run into resistance at the 38.2% retracement at 101. And even if I just look at that, it does coincide with a rally back to the high of the previous 4th wave at 2 degrees. I've also established the corrective price channel. So if I just go down here to another daily chart, and I just can spread out the price action, because at this moment in time, I'm concerned with the price action from 96.22, as in this is what I'm analyzing. So while I can get an idea of the move into the low and what's occurring with wave B, I now want to focus on the rally from 96.22. I've done some analysis, as we've just seen, that this fits the idea of a double zigzag within wave B, so I'm willing to stick with that. The idea, or the question at this juncture is the move from 98.03 wave A of Y, or maybe is this A, B, and this is wave C? So in order to look at that, we want to go down into the lower time frame charts, i.e. the 4-hour chart. But just before we go down, we can establish the quality projection for the second zigzag purple wave Y, and that does come in at 137. So just below the 38.2%. So that's creating a cluster now with the internal projections within wave B, and then of course with the retracement of wave A, and then the high of the previous 4th wave, etc. So I'm adding guidelines to the chart, which would be, opening up an area of price action. A could be attracted to come back and test them, or B, if we do end up getting there, watching to see if there's recognition, potential resistance, and the completion of this wave B pattern. So just going down to the 4-hour chart now, if we take a look at the internals, where we have the initial zigzag in place, corrected pullback for wave X, and now looking higher from 98.03. The question here now is that the price action into the 98.64 low, it's quite corrective and sideways. If we just take a deeper look at it, I'm counting it as a a barrier triangle. And yes, I'll just put in the internal waves here. We have a situation where wave B did push above wave D pushed above wave B. But as you know, I've been a student in the Traders Classroom, and we've reviewed this a number of times, that the guidelines of the barrier triangle is wave D must end around the area of wave B, or essentially at the area. And when we get into the price action, basically off that low, I have investigated other situations of maybe wave B ended here. This could be the start of it. And I will keep that in mind. But the problem with that is, if we just take a look at it closer, it's very overlapping 3-wave move. So really, for me to consider this to be a motive structure, I'd have to start bringing out the diagonal pattern, maybe consider an expanding diagonal, start considering maybe 1, then expand the flat wave 2, and then maybe 1, 2, 1, 2. So either a series of 1s and 2s, or maybe the triangle. But at this juncture, the channeling for the double zigzag, it does seem to be holding well. So I can use that lower boundary as a guideline for ongoing upside strength. But even at the 98.64 low, it does look like we've got further to go within a developing impulse. So we've key level raised to 99.74 and looking higher from there. But what I could do is drop a key level back to the top of wave 1 at 99.36. And if price action was to pull back in a corrective manner and overlap with this, it would be unlikely that it would be part of a still unfolding wave C. So even if we were to consider the wave B here, and this was a series of 1s and 2s, and you had ongoing strength for the series of 3rd, 4th, 5th to complete the C wave, you wouldn't still be expecting price action to get below 99.36. So that's a case where we can be aware of, yes, this could be a triangle or it could be a series of 1s and 2s. Either of the scenario is not ideal, but I think from the textbook guidelines, this seems best to show at this juncture the barrier triangle rather than a series of 1s and 2s where we've had 1 and a big, huge expanded flat wave 2. So that's a case of having to weigh up which would be the better scenario, which satisfies the more guidelines at that juncture. And I think going by guidelines to be satisfied, the triangle does. So from 98.64, looking higher in wave C. So it's looking like there's further upside to complete that double zigzag pattern, but then leaning on the higher wave degree outlook, it's a correction within what would be a still dominant downtrend within the dollar index. So here is the monthly chart. We can even see from the monthly chart that the rally that's occurring is coming from the trend line on the monthly chart, the impulse channel, and that the internals of the rally that we've seen from 96.22 is corrective. So on a monthly analysis, the corrective price action is suggesting that the downtrend is still intact and that this is a counter trend move in what is to be a still unfolding downtrend. However, over the next days, possibly weeks, we have to allow for the pattern to unfold, and once in place then we'll be looking to see if we do roll over and a resumption of the downtrend. So I thought that was a good example of when we have to review the price action, i.e. you've got a pattern violated, then you have to do a bit of homework into what the price action could be, and do you have to make some adjustments not only to the pattern that you were working with, i.e. in this case the triangle, but even having to kind of go back at another wave degree and possibly adjust the internal waves there. And the reason that we had to do that was because the price action from 96.22 was giving us evidence or telling us to do that, because the best pattern at this juncture was the double zigzag scenario, and the way to fit the double zigzag scenario into the previous price action was to make those adjustments. So I hope there's a lot in that, and of course that's there's a detailed analysis and difficult enough price action to be analyzing. But I thought there's a good lesson for you to see that and how I'm thinking. And if you have any questions or queries, don't hesitate to email in, or examples of other price action that's not US dollar index, similar situations. Don't hesitate to send them in and we can take a look at them. Thank you for watching. I'll speak to you all again soon. Bye for now.